Hello, everyone, and welcome to Institutional NFT Strategy presented by BitGo and MetaMask Institutional. I'm Taylor Engstrom. We're going to get started in just a minute here, making sure all our tech is good to go and all you good folks are in here. So give us about 30 seconds and we'll get started. Once again, this is Taylor Engstrom and this is Institutional NFT Strategy. Happy Thursday, everyone. All right, perfect. About 2 minutes after the hour, I think we're ready to go. We will get started here with some introductions. I'm joined by my esteemed guest here, Nuri Chan, Vice President of Product at BitGo, and my colleague Johan Bornman, Product Lead at MetaMask Institutional and Consensus. I, of course, am Taylor Engstrom, Product Marketing Manager at MetaMask Institutional. Nuri, why don't you go ahead and introduce us? And then after you do that, please tell us one thing you're super excited about in Web3 and crypto currently, despite some of the stuff going on in the market right now.
Yeah, that sounds good. So my name is Nuri. I lead product at BitGo, and BitGo is a leading digital asset custodian and wallet platform. For institutions, we provide custody, trade, lending, borrowing, as well as security solutions. And our wallet platform is effectively used by over 150 exchanges worldwide. And lastly, we are one of the co-founders of Wrap Bitcoin. And I'll pass it off to Johan. Oh, sorry. The thing that I'm effectively interested in, very obsessed with bridges and these message passing protocols out in crypto right now.
Thank you, Nuri. Good morning, all. My name is Johan Bornman. I lead a product called MetaMask Institutional. We are a Web3 institutional platform. We provide unrivaled access to Web3 with the most trusted wallet in the space, MetaMask. And then on top of that, we've built a range of capabilities to cater to institutions. Most importantly, we have the capabilities to connect into custodians and therefore work with world-class partners like BitGo to ensure we can cater to key management in line with institutional needs. And then around that, we've built capabilities around monitoring, reporting, KYT risk management on DeFi pools. So thinking very deeply about how do organizations transact in Web3 and building the capabilities that they need. I'm going to cheat and give two areas that I'm very interested in right now. Obviously, the merge, has to mention that. And then I think another important aspect is account abstraction, fundamentally thinking about the power of wallets and what they will look like in the future.
Very cool. Lovely. I'm glad I asked. We got to keep the hope going. We got to keep the morale high. So really excited. We have two very, experts with us in the field of institutional strategy overall, as well as some NFTs. So let's go ahead and get into it. And again, thank you everyone for their attendance today. So quick agenda. So obviously we talked about BitGo and MMI. We're going to talk about NFTs and crypto markets overall. We're going to talk about NFTs uniquely for institutions. We're going to talk about custody, and then we're going to talk about some strategies and approaches for institutions, not only getting into NFTs, but maybe further sophisticating their strategies. We're going to talk about the current challenges today. We're going to talk about the future. Obviously, none of us can tell the future, and none of us are NFT artists on this call, but we can talk about sort of the developments in the technology and the things we're excited about with our partners as well as our own platforms. And lastly, we have Q&A. So if you want to go ahead and type in the chat, ask us a question, we'll be sure to try and answer them at the end. Amazing. So just talked about BitGo and MMI. Before we get into that, I did want to keep this pretty interactive. We've all been on enough of these sort of calls, so I want to go ahead and poll the audience here, just sort of their current involvement with NFTs. And there should be a poll coming up now. Perfect. Don't be shy. Here we go. Get some answers coming in. Amazing. And then we're going to ask a follow-up question because we want to make really, really sure. So there should be a second poll coming up as well. All right, we got some really good stuff here. All right, perfect. All right, so we're going to proceed with that and we'll get into the bulk of our content here. So obviously, you know, we're to address the elephant in the room. We're in a bit of a sort of topsy-turvy macro environment, market conditions for not only crypto, but for the broader global economy, you know, are in an interesting place right now. That said, we really believe in the truly transformative technology that is NFTs and NFTs specifically for institutions. But if you're joining in today, you probably are curious about, you know, why we're touching on this stuff now and maybe some of the relationships between NFTs and the broader crypto market. So I would pose this first question to you here, Johan, and say, you know, how are NFTs and the space of DeFi, decentralized finance, interrelated in your opinion?
Yeah, I think currently or historically, they've been two separate categories. Arguably, DeFi was sort of one of the first killer apps of Web3. And what DeFi is, just a reminder for folks, is sort of taking the fundamental principles of finance, so the fundamental building blocks, saving, investing, lending and borrowing, swapping or trading, and sort of building those sort of financial primitives in a decentralized way. And NFTs have been sort of one of the other killer apps that have emerged within Web3. And what you have with NFTs obviously is ownership, digital ownership, and the ownership of the digital assets. And with that, obviously, what you have then is the capability of these two different categories merging. And what you've seen happen over the last several months and definitely year to date is sort of the overlapping between NFTs and DeFi generally. And so this is starting to happen where you have these fundamental building blocks, so lending and borrowing, you have renting, fractionalization, derivatives, all the fundamental financial primitives forming around NFTs. So you very much start to see these worlds blend in a very interesting fashion. Overall, they're obviously deeply correlated. Crypto is deeply correlated. And so to your point, Taylor, we're obviously seeing a lot of volatility in the market, and that's impacting both NFTs and DeFi.
Yeah, and if I may add, I think definitely Johan's salient point about more and increasing financialization of NFTs definitely seems to be true. The other thing that's particularly interesting is when you, I guess during DeFi summer, and if you effectively viewed DeFi usage, there was this common theme of rotations, where from one series of protocols to another protocols, you would see total value locked decrease on one end and increase on the other end. So in other words, funds would come in, but they would effectively rotate between a variety of ecosystems, whether it's ETH mainnet to AVAX to Solana, etc. What's particularly interesting about NFTs is actually, I'm sure there's a little bit of rotation, but in general, the NFT market for, let's say, on Ethereum or Solana or Polygon Matic, in general, it's just all moving up and to the right? So less rotation. It just feels like more and more users are actually onboarding and beginning to hold NFTs, which seems relatively promising for the industry at large.
Amazing. Two super thoughtful answers. I appreciate it. And one sort of key point about NFTs is sort of the ownership and how that's sort of flipping that on its model, flipping that model on its head in the sort of digital sphere. So in terms of, you know, what's going on with ownership and creators and builders, Johan, any sort of additional points to these pretty interesting images here?
Yeah, I think to Neri's point, maybe sort of building on the previous thoughtful comment he's made, I think NFTs are arguably far more relatable and far more of a digital asset that can cross the chasm to the mainstream. And so what you've seen particularly happen over the last year, sort of 12 months to 18 months, is just a sort of crossing the chasm, both on the retail side as well as the institutional side. I'm sure we'll talk more about that. And with that, you've obviously seen the crypto native community very much embracing NFTs. So you're starting to see a lot of investments across DAOs, indices are being formed, and a lot of builders kind of moving into the space, working with the ERC standards that kind of NFTs provide. And again, I think we're very, very early in this. And this is maybe comes back to your earlier point in your question, tailored around kind of market volatility. I think technology tends to be overhyped over the short term, but very much underhyped over the long term. It's called Aron's law. And I think, looking at NFTs and looking at the slide, I think it's an indication of just sort of how early we are. And also, even though things have been frothy over the short term, just the long-term value and the potential that we have in the space.
Amazing. And just a couple more sort of, additional pieces of evidence for, all the stuff we're talking about in terms of the paradigm shift that is digital ownership, the paradigm shift that is NFT, giving a lot of power back to sort of the participants in different marketplaces and ecosystems. As you see here, just a lot of positive momentum, not only in what we all sort of understand as the metaverse, but in sports and gaming and collectibles writ large as well. But the reason we're here is for NFTs from the institutional perspective. So moving right on, Nuri, in terms of getting started, what should institutions know? What do they maybe need? Any sort of tools you'd love to mention? We'd love to hear.
Yeah. Maybe I'll first talk about some segments that we see, as well as kind of like what their behaviors kind of look like insofar as, let's say, buying or holding NFTs. So we typically run into at least three segments. The very first segment are your typical funds that are looking largely to buy and hold. And as Johan mentioned, maybe in some cases actually building indices on top of a broad collection of either collectibles or art or pick your favorite category of NFTs. The second segment are admittedly traders. So obviously the NFT market in and of itself, there's been quite a bit of volume. It's definitely non-trivial, right? And I think with it comes lots of opportunities for arbitrage, and traders are arriving, and they're arriving in quite some numbers. And the behavior behind these traders, it's pretty typical. They will sweep floors. They will potentially hold. Potentially they'll lend out some of their inventory, and they'll obviously trade. So that's kind of another segment. And then the third segment that we predominantly run into are what we kind of typically think of as big brands, like retail brands, as an example, like the luxury goods or like the Nikes of the world. And these segments are particularly looking to tokenize. And what I mean by that is, as we all know, it's actually relatively easy to mint your own NFT. It's actually not too difficult now. There are tons of out-of-the-box solutions that you can do so. But for these big brands, quite a few of them are currently, I would say, handcuffed in the sense that they have a really, really difficult constraint that they have to navigate around. And that constraint is that they can't hold crypto on their balance sheet. So effectively, they need this kind of like out-of-the-box solution where they want to be able to mint, they want to be able to sell. And lastly, they don't want to hold any crypto at all. They effectively want to get payments dispersed and remitted in fiat. So those are kind of like the segments that we see. Now kind of bringing it back to, how do these institutions predominantly get started? I would say it's kind of like a crawl, walk, run type of version. The crawl version is MetaMask, right? One of the most popular wallets out there. And maybe in some cases using a hardware device, whether it's a ledger or a Trezor. For some other institutions, for funds, or maybe even DAOs actually, or any collective, you may see Gnosis Multisig, right? So this is a multi-sig contract-based wallet where you can effectively have a variety of key holders. And it's, again, multi-sig, so you need a quorum of keys to sign for any transactions. And then in terms of like the more robust kind of offering, this is where tools like MetaMask Institutional with BitGo's NFT wallet effectively comes in, where if you are looking for a much more secure as well as I would say sophisticated in some way solution that helps safeguard your assets, but also allows for unrivaled access to interact with all sorts of marketplaces and all sorts of protocols. That this solution here is effectively the run version. But yeah, that's what we see.
I think you might be on mute, Heather.
Yeah, I think you're. I think.
Whoops. Thank you. So Nuri, just to go a bit further on the sort of custodial point, obviously we talked about the crawl, walk, run, but for institutions, it sort of really changes the landscape in terms of how to participate in NFT in a compliant and a safe way. So would love to hear more about that.
Yeah. I think when it comes down to there's nothing admittedly wrong with the crawl, walk, run version, right? So either holding it with a hot wallet, so to speak, or hardware device, or having a Gnosis multi-sig. It all comes down to like risk appetite and risk management, where again, if as like a personal investor or even like a high net worth individual, if you have a pocket of NFTs, maybe it makes sense, right? But if you're effectively, let's say, an institution, let's say a fund that wants to build an index on top of your NFTs, and let's say the value of this is $100 million, right? Some arbitrary number. The risk appetite really, really increases. What I mean by that is with any of the previous kind of crawl, walk versions, there's all sorts of risks related to operations, controls, things like that. So as an example, obviously, if you have a single individual that holds the private key and holds all the NFTs, obviously, you have to trust that person quite a bit, right? Even in the Gnosis multi-sig, one of the kind of nightmare stories that we've heard about are instances where you can have this multi-sig smart contract-based wallet that has a number of keys, and the key holders can be individuals at a given DAO or entity. And naturally what happens is, DAOs are kind of like modern day companies, right? There's a little bit of turnover. So what happens is as people turn over and leave the DAO or the organization, sometimes they lose the keys. And then you potentially may have a multi-sig contract where you don't even have enough keys to actually sign and recover your NFTs, right? Like operational concerns like this currently exist. So for funds with admittedly more high stakes, with larger collections of NFTs, really like the market kind of needs something that's much more secure, that has more sophisticated wallet policies and controls, that has recovery methods, things like that. And that's admittedly where the BitGo NFT wallet solution comes in. From a security perspective, it is multi-sig. So it effectively requires a quorum or majority of keys to sign any transaction. Depending on your security profile, we have a full custody offering, meaning BitGo will, on your behalf, manage all your keys. And there are all sorts of additional policies that we have in place to ensure that you're effectively interacting with the right protocols, that you have the right spending permissions, things like that.
Amazing. Thank you, Nuri. Obviously, it's a very, very serious, very serious journey to go on to really invest in NFTs in a safe and a compliant way. And the bigger the strategy, the bigger the fund, the assets under management, the more you need to really consider these custodial tech options and everything that they present, as well as the risk. So I appreciate you going through that. But that's Johan, sorry, do you want to go ahead?
Oh, sorry, I was just going to add one last thing. Even if it sounds like really jargony and like relatively complex and like sophisticated, the silver lining here is it's actually really easy for any institution to get started. The BitGo kind of user experience, along with MetaMask Institutional, simplifies things dramatically, where again, you don't have to worry about operational concerns. You don't have to worry about key loss. You don't have to worry about all that stuff. So we've effectively taken what can be a very complicated kind of management process for safeguarding your NFTs, and we've turned it into something that's super, super lightweight, super simple for the end user.
Amazing. Great to know. Yeah, to Johan's sort of analogy of the crossing of the chasm, it really helps to make these big, seemingly scary things so simple and streamlined. So appreciate that additional color. But Johan, we did a poll at the beginning, and we saw as institutions who on this sort of call owns NFTs today. And while the majority was yes, there was about half that maybe don't. So in terms of the momentum we're seeing for institutional NFT adoption, obviously you speak with customers every day. To tell us a little bit about that.
Yeah, I think it's been fascinating to sort of view the market change. I think Nuri mentioned earlier how you saw very much a shift in DeFi within the last few years as capital moved from different layer ones to sort of chase yield. And a trend we started seeing last year, and it's really sort of picked up speed even this year, is sort of this institutional adoption of NFTs more broadly. And definitely our conversations have changed from speaking with predominantly crypto funds, market makers, DAOs, trading desks, institutions that are allocating into Web3 to take advantage of yield opportunities, into organizations focusing more towards NFTs. And that shift sort of happened roughly sort of 6 months ago, I would say, and it's been picking up steam over the last quarter or so. And to Nuri's point earlier around sort of customer segmentation, this is something we've definitely observed on our side as well. Typically, you have your crypto native folks, so your DAOs or your gaming guilds, you have your DeFi funds, you have your crypto funds, and then you can kind of move along that risk spectrum in terms of traditional organizations, traditional banks, etc. And we're very much starting to see the traditional orgs stepping into Web3, specifically around NFTs, which I think is incredibly exciting. Because one of our missions at MetaMask Institutional is very much focused on how do we bridge every single organization on planet Earth into Web3. And seeing more traditional organizations, not necessarily your crypto natives, accessing NFTs, I think is really fundamentally important. And so I think this chart just really speaks to the momentum that we're seeing towards NFT allocation. And so despite volumes being down, despite sort of marketplace sales being down, you're actually starting to see kind of really fundamental interest in the space, and large organizations sort of thinking about their IPs and thinking about fractionalizing and minting their NFTs and their IP into NFTs. And so we're tremendously excited to see kind of this user group grow over the last 6 months.
Amazing. And yeah, to dive a bit more into the sort of strategy aspect, Johan and Nuri as well. I know we mentioned sort of buy and hold, and we mentioned sort of the potential tools and the steps you need to do ahead of time to get into the space. But anything to add, in terms of the how the approach to NFT acquisition or creation or holding might be different for institutions, and yeah, anything about that piece either of you would like to add?
Yeah, so we typically see a lot of NFT funds. We've also started seeing crypto funds or DeFi focused funds starting to launch NFT strategies over the last 6 months. And that normally focuses on sort of asset allocating across different collections, focusing very squarely on obviously metrics like floor price and rarity, trying to acquire assets or digital assets that have obviously the ability to earn risk-adjusted returns and above average risk-adjusted returns. What we are starting to see, which is a very interesting trend, is more sophisticated strategies appearing. So this sort of culminates around kind of programmatic trading and a very deep focus around risk management on a programmatic basis. And I think this is culminating also the tooling around NFTs generally developing over the last 6 months. I think the combination of these two things is driving more sophisticated investors into the space. I think we're still very early, and we're having a discussion earlier today around bridging and NFTs and sort of what risk that might hold within the MMI team. And I think we're very early in sort of the same sophistication that you might see in other trading strategies. But again, the trend is very much up and to the right, as Nuri mentioned earlier.
That's right. The only thing I'd add to that is I think in addition to programmatic trading, as well as more sophisticated trading strategies, we're also beginning to, I think, see some institutions try to solve this question around pricing and valuation of NFTs a little more precisely. And hand in hand with that is them also beginning to move more towards lending, where you could effectively borrow against your NFTs. And obviously the constraint there is you have to be able to understand what this thing is worth. So we're also beginning to see a little bit of sophistication or more interesting things, novel things enter through that domain.
Amazing. Super appreciate the context on both sides. And one thing we sort of haven't touched into too much is the sort of challenges today. Obviously, anyone with a MetaMask wallet or a Coinbase wallet or whatever it is can purchase on OpenSea, but it's a little different with institutions and shareholders and all the sort of great things that come with organizational scale. So, Johan, to pose this to you, how is the NFT space today? How is the experience broken?
Yeah, so we did a lot of work on this probably about 3 months ago, looking at how institutions acquire NFTs. And what we found was really, again, to the slide, really a broken institutional user experience. What you tend to have is fragmentation at every single layer of the stack. And so if I unpack that, you often find that organizations will be working with potentially multiple different custodians. Within those custodians, they will have multiple different wallets or accounts. Those accounts will hold different NFTs. They'll be transacting across different layer ones or potentially layer twos, and they'll be interacting with different marketplaces. And so you have, again, as I mentioned, this fragmentation at every single layer. And there are some fantastic tools in the market today that focuses on providing valuation, pricing, rarity scores, a range of analytics around volumes and sales and helping identify opportunities. But there's not a lot of focus around how does an institution just consolidate all these fragmented layers. And it's something we paid very close attention to and sort of now have built capabilities within MetaMask Institutional to again, consolidate and bring together all these broken layers. So this essentially allows organizations to not just have a custodial account, very importantly, but obviously have multiple wallets, hold multiple different NFTs within those wallets, interact across multiple different layer ones, and then very importantly, interact with multiple different marketplaces, and then consolidate all that data, consolidate all those NFTs in one consolidated portfolio dashboard that we offer to institutions. And so something that we're very excited about. We're working with a lot of crypto funds specifically to focus on what is the most valuable data they need to see as they make decisions across their NFT portfolios. And it's, again, quite a nascent space. And I think that then naturally provides opportunity to build rich and engaging user experiences.
Amazing. And yeah, just to illustrate some of this fragmentation here, we have this pretty excellent graphic here with Johan at the center of it, as Johan, the investment fund, but really the fragmentation can be seen, as you mentioned, at the marketplace level, at the custodial level. And really our goal here with MMI and our partnership with BitGo is to help simplify, streamline, and consolidate, as you put it, some of those things. But to go right along here, in terms of the future of NFTs and the future specifically for institutional strategy, before we go into that, I want to answer this quick question from Vic here in terms of, he asked more broadly, institutions is obviously a large tent. What are the sort of, different types of institutions, types of organizations we see as early adopters in the space? I know we covered some of this early on, but would love to hear, Nuri and Johan, what you're seeing on the ground in terms of, in terms of those institutional segments.
Yeah, I think it definitely is quite a big category unto itself. I think the three segments that we define, at least, or that we see, to reiterate, would be some are predominantly like funds unto itself. That the segment that's primarily keen to buy and hold. The kind of trader population, they might look like market makers, or they might look like your traditional financial, like trading shops. And then the third segment would be large, predominantly kind of consumer-facing brands that are looking to effectively tokenize NFTs. But those are the three primary segments that we run into.
Yeah, and our side, very similar, I would say. The way we tend to think about it is that you tend to find sort of a correlation in terms of regulatory oversight that organizations face, as well as obviously the expertise they have within crypto more broadly. And so you tend to be able to segment the market by your DeFi crypto funds, your market makers, your trading desk, your hedge funds, your family offices, and then obviously your traditional financial players. And again, the sort of that mapping tends to roughly correlate with the sophistication around crypto generally, in terms of how actively they're accessing the ecosystem more broadly. And then, as Nuri mentioned, we're starting to see sort of a category emerge now, specifically around traditional organizations, which again, as I mentioned, is tremendously exciting. So maybe that's sort of a helpful mental model to hold, that you have sort of this crossing the chasm from your deeply crypto native organizations to now more traditional organizations thinking about NFTs more broadly.
Perfect. Vic, I hope that answers your question. With that being said, we touched on the evolution into programmatic trading. Johan, I know you have this great sort of phrase about NFTs becoming deified. And then we also, there's some interesting things going on with NFT specific decentralized exchanges and vaults. So in terms of the future and looking at the pace of technology, specifically from an institutional lens, Nuri or Johan, and anything you're really excited about, and maybe some things you're currently working on as this really nascent space continues to change at a rapid pace.
Yeah, I think personal interest of mine is definitely related to financialization. And fractionalization, I guess, is the more specific interest, where, as an example, a collection of folks can pull together and purchase and hold either a single NFT or a number of NFTs in a collection, or even across collections, right? And then you can effectively mint fractionalized shares of this. And with the fractionalized shares, obviously you have a fractional representative share of the NFT or collection. But then using this token in and of itself, you can start to swap, you can trade, you can provide liquidity, you can do all sorts of things. And at least at first glance, like, this feels like one of the kind of primary building blocks to further help get NFTs into, if exactly as Johan highlighted, right? For NFTs to become DeFi-ified, right? Feels like one of those primitives. And then aside from that, I think another thing that we're keen on helping with and looking into is related to pricing in and of itself. Where again, there's this esoteric question around, how do you value an NFT, right? If you ask some of our segments, they'll bring up rarity and traits as an example. You talk to another segment, and their notion of value might be something along the lines of the median floor price of the last 90 days, right? It really depends on who you ask and like how they fundamentally think about the value of these NFTs. So pricing is definitely another thing that we're particularly interested in.
Yeah, such an interesting topic. I think we're starting to see those fundamental financial premises or building blocks of DeFi merge with NFTs in a very interesting fashion. So Nuri mentioned fractionalization. We're obviously starting to see lending as well as renting. We're starting to see as well derivatives markets forming around NFTs more broadly. And I think an aspect that I think is fascinating, to Nuri's point, is just pricing generally. It's really interesting to have 10 different conversations with 10 different organizations, and you tend to get 10 different answers around like how they're thinking about pricing. We hear a range of answers from average sales price, to Nuri's point, or floor pricing. And a lot of our very sophisticated NFT funds focus very squarely on working with one pricing provider that kind of encapsulates everything. So that will be floor price, that will be average sales price, that will be rarity. And so as you're starting to see the market mature, you're definitely starting to see organizations wanting to work with kind of a unified price that sort of takes the responsibility of incorporating all that data. And I think you're seeing a lot of interesting innovation in the space more broadly, a lot of machine learning being applied to pricing. The likes of, for example, Upshot and Nansen come to mind, NFT Bank, or some providers that do this. Really interesting APIs being built across the ecosystem to focus on how do we think about all the important, valuable data that kind of institutions need around NFTs more broadly. So again, I think we're very early in terms of this DeFiification or this fractionalization, but we're starting to see more and more of it. And I think that, one of my favorite quotes is a William Gibson quote about the future's already here, it's not evenly distributed. And I think, what you're seeing in NFTs is very much the future being created. And I suspect, 10 years from now, all the things we're talking about now are going to be so deeply embedded in the way organizations create, store, and transfer value.
Amazing. Getting close to time here. We're at 36, past the hour. But, like we said, despite what's going on with market volatility, both in crypto and the macro environment overall, we want to keep this bullish. We want to keep this, positive and hopeful. So to end with a couple sort of facts and figures about the rapidly growing market opportunity that is NFTs across collectibles, gaming, metaverse, some great projects we see and our clients see both at BitGo and MMI. Just some figures here to give you sort of an idea of volume. And then lastly, sort of institutions as today, as mentioned several times on this call, both before and after this webinar in terms of the institutional sort of hunger, but also the need, the want for, and the demand really for accessing NFTs in a safe and a compliant way. A number of things can be achieved with NFTs, not only for individuals, but institutions as well. And with that being said, to sort of close us out right before the questions, a lot of great questions coming in. Reminder, please type them in the chat and we'll try our best to get to them at the end. But in terms of what's next for BitGo and MMI, would love to hear more from both of you.
Yeah, at least on the BitGo side, as stated here, we've been, it's a Johan's point as well. We've been thinking about pricing quite a bit, and we at least work with one partner today by the name of Verify for a variety of use cases, honestly. For example, things related to getting NFT metadata and a variety of data points related to pricing. And that's primarily for us to also begin to understand what can be done with pricing and to identify what gaps there are. And then moving beyond that, effectively in terms of kind of our wallet solution, we're obviously looking to more and more networks in and of itself. Again, the NFT market is not just ETH mainnet. Solana is obviously there, and NFTs will continue to effectively grow in all sorts of different ecosystems. So we're looking to expand to those ecosystems as well.
Yeah, so I think on our side, we have this sort of grand vision and mission to bridge every single organization on planet Earth into Web3. And today we work with, again, a lot of crypto funds, market makers, trading desks, NFT funds, and traditional organizations. And therefore, I think a lot of the product experiences we've built by its very nature have been sort of focusing on that user group. A thing we think very deeply about is, as Web3 crosses the chasm, as more organizations start allocating to the space, and particularly around NFTs, how can we build really rich and engaging product experiences? And I think that's really important. It ties very closely, obviously, with some of our first principles around security and safety. And I think a big thing we talk a lot about on this call is around how can we make sure that organizations access NFTs security and safety. On top of that, we sort of have this first principle around making sure we're stay as close to the blockchain as possible. So this means that we always try and index data ourselves or obtain data around kind of digital assets and NFTs directly from the blockchain. And then following that approach, we tend to take quite an agnostic approach in terms of working with different providers around arriving at what we believe is the most important fundamental information to show institutions when they're accessing NFTs. And so I think a lot of our thinking going forward around kind of this particular section of Web3 is very focused around pricing, very similar to what Nuri has mentioned, and also thinking very deeply about the most important information around rarity, volume sales, and helping institutions unearth the most important opportunities to them in the space. So this is some of the categories we're very focused on at the moment.
Amazing. Thank you both for that very succinct summary. A lot of exciting things going on with both product roadmaps at BitGo and at MetaMask Institutional, as well as the broader sort of NFT institutional space. So with that said, we've reached close to the end of the webinar. We have a lot of great questions coming through in the chat. If you forgot to ask your question earlier or it just popped in your head, please type it in and we'll do our best to get to it. I will kick us off with the first question here. Nuri, does BitGo offer an MPC custody model?
Yeah, so for some assets, some networks specifically, we do offer threshold signature scheme. So a particular branch of multi-party computation.
Awesome. Thank you for that, Nuri. The next question, which I think you both can answer, but Johan, I'll let you kick this off. We talked about sort of the coming in of Fortune 1000, other sort of consumer-facing brands into the NFT space. With that said, this question is from Boris. Do you foresee any issues regarding IP-related challenges when it comes to the current custody model for NFTs?
It's a really profound question. And I think that, we're starting to see a lot of tools being built to specifically address this problem. I was at Permissionless in Florida and also connected with an organization in the NFT event in NYC to focus specifically on this problem. I wouldn't say that I see a lot of issues regarding IP-related challenges, but it is definitely a consideration. But I think the positive message is that we're in a very sort of nascent market, and there's a lot of tooling infrastructure and products and services being built to help address some of these challenges. So I remain tremendously optimistic that if there are any technical challenges or any sort of challenge in the space, the ecosystem will solve it.
Amazing. Thank you for that very thoughtful answer to a super thoughtful question. Thank you, Boris. Much appreciated. Let's quickly check here. In the future. Cool. So I think we probably touched on this a couple times, but in terms of safety, what is the safest way or ways to hold my high-valued NFT? And if that is way too individual, what are maybe some unsafe ways that should be avoided?
Yeah, I mean, I think from our vantage point, the safest way is to custody the NFTs with BitGo, where again, you have a super secure wallet that's multi-sig. We have a variety of offerings as well, where our full custodial offering, we actually manage all the keys on your behalf. And just to give you a sense of what this kind of custodial offering is, literally the keys safeguarding these wallets are available in undisclosed locations in bank-grade vaults with Faraday cages so that there's no internet connectivity. Like, we're literally talking about that level of security. So obviously that's about as secure as you can get. Some unsecure ways, I make this recommendation to almost everybody. Please do try to get a hardware wallet. And definitely, I think in any hot wallet, just try to keep like the bare minimum that you need there, and try to keep most of your funds in a hardware wallet. That's probably my parting recommendation.
Wonderful. Thank you, Nuri. Another question here, which I think is a bit of a compliment, again, comes from Vic in terms of what % of effort on the consensus MMI side is being spent on NFT? And I guess, another way I could phrase that is sort of, what's coming up next on the roadmap? How sort of invested are we in? How much do we maybe believe on this being a transformative technology for institutions increasingly participating in Web3 more broadly?
Yeah, thanks for the question, Vic. So today, predominantly, we still see and work with organizations that are squarely focusing and accessing Web3 from a DeFi perspective. So the vast majority of our organizations we deal with and our MMI users are very focused on, trading strategies within DeFi, lending, borrowing, staking, etc. And so I would say the biggest focus for us is within kind of that category. But having said that, as I mentioned, we've definitely seen our conversations change roughly sort of 3 to 6 months ago. And it's a category that we find tremendously exciting, purely because we're starting to see more traditional organizations stepping into the space. And it's also a very fast growing category. And so it's just something we're paying very close attention to. In terms of rough percentages, I think it'd be sort of hard to quantify, but I'd probably put it about sort of 10% maybe in terms of an area that we're focusing on building out additional capabilities. As mentioned, though, you're seeing these two worlds merge very quickly. And so I think the lines are being blurred so quickly that this is why I mentioned that it's hard to sort of put an exact number around it, because ultimately what NFTs are is just a digital assets. And therefore, as sort of the market matures, you'll definitely start seeing more and more organizations kind of holding a version of this, and not on their balance sheets, but potentially in a BitGo wallet.
Amazing. Thank you so much for that answer, Johan. A next question would be, how do you both think about insurance for NFT holders?
That's a very interesting one. This all goes back to price in and of itself and the valuation of an NFT. So BitGo specifically, we've been working with quite a number of carriers and underwriters in the industry to try to get effectively one of the very first policies for NFT coverage in and of itself. Full disclosure, this is something that we're currently working on. But ultimately, it's all predicated on effectively the valuation. So it again devolves back to this central question of how do you think about price, right? To kind of Johan's example earlier, you can have multiple different price points that effectively represent a particular thing, whether it's floor price or sale price, or some piece of math that you effectively run to compute, let's say, the value based off of rarity, right? Everything effectively devolves around price. And I think for that reason, the entire insurance industry is a step behind. But having said that, I'm very, very optimistic, right? We've gotten insurance coverage for, let's say, fungible digital assets in and of itself. And I think it's just a matter of time before we're able to cover NFTs as well.
Yeah, and I think fractionalization will obviously help with that trend more broadly. As we start fractionalizing more NFTs, we're starting to have AMMs or DEXs forming to help sort of the trading of NFTs. And so as soon as we start seeing more depth and liquidity around the market, pricing will become less obscure and sort of more come to light. And then off the back of that, obviously stronger, more in-depth markets will form. And therefore, off the back of that, you'll have more insurance providers willing to kind of take the risk around this. And so I commend BitGo for the work they're doing on this. I think, it's not common that you tend to find that there's a lot of insurance around for NFTs more broadly, and specifically around hot wallets generally, and accessing Web3 or DeFi assets. It's very much an emerging kind of industry.
Wonderful. Thank you both for those answers. This next question comes from Shirko, I believe. I hope I pronounced that name right. His or her question is: in the future, what are your plans, either BitGo or MMI, to attract traditional institutions to the NFT sort of space? It seems like we've mentioned already a lot of sort of reasons for them getting in. Not only number go up, but other sort of sophisticated reasons, especially on that consumer-facing side. So yeah, pose to both of you as you attempt to bring on, as Johan, to your point, bringing every organization on earth into Web3. Maybe how do you bring them specifically on into NFTs specifically?
Yeah, I think it sort of normally coalesces around what is the typical decision-making process that organizations go through. And that tends to start with access. How do we gain access to these assets? Followed very closely by, how do we gain access to these assets in a secure manner that can scale across the organization? And hopefully a lot of things we've talked about today, both Nur and I sort of touched very squarely on both those two categories. And then around that, there's also the additional capabilities that I think both of us have mentioned that we think very deeply about. So as an organization, how can I gain access? And obviously we would say with MetaMask, we ideally provide unrivaled access to all of Web3, including all marketplaces across all EVMs, and therefore give organizations that kind of bridge into NFTs more broadly. But once they've acquired that asset and kind of are holding it securely, how can they monitor that asset? How can they report on that asset? How can they make sure it's insured? All the things we've mentioned in sort of the last 45 minutes. I think these are kind of hopefully the contribution we're making to the ecosystem more broadly. And I think then on top of that, as I mentioned earlier, it's very important that we build safe and secure products that scale. But as sort of less crypto native organizations step into the space, I think it's profoundly important that we build incredibly rich product experiences. And this is something we think very deeply about. And so hopefully, some of the pieces we've mentioned already and some of the things we're building next is part of kind of bridging more organizations into the space.
Amazing. That experience aspect is such a sort of under talked about point. So appreciate that, Johan. I know we're getting close here to time. Thank you to all the amazing folks who've stayed through up until the end. I think this is a pretty great question for us to end on, coming from Emilio. Today, more than 90% of the NFT adoption is concentrated in the collectibles, art, and gaming, as we saw in some of those great charts. What other markets or use cases do you guys see coming in the future?
Yeah, at least for me, I think collectibles have always been particularly interesting. I think the real inflection point last year for me, where I guess NFTs felt very, very real and applicable to me, was related to community. It was with LinksDAO. So for those unfamiliar with LinksDAO, it's effectively a community, a group of folks that got together and said, look, we're going to buy a golf club, right? And effectively to raise funds, they issued this mint and people bought in. And I think in a lot of ways, I know there's a lot of hype right now around kind of reinventing the creator economy, reinventing the music industry, et cetera, with NFTs. And I'm sure, as we described before, there's probably a little bit of overhype right now, for sure. But at least the underlying primitive and the functional use cases of it, it definitely feels real. So a whole basket of things related to community definitely seems particularly interesting.
Yeah, I think we're starting to see a lot more utility use cases. I'm going to give a very simple example, but I think it's a really important one. Wimbledon was here in London a few months ago, and we have ticket title scalpers that obviously scalp tickets, and part of that process was involved in NFTs, where if a scalper or touter would sell a ticket, part of those royalties would go back to the Wimbledon organization. And so you're starting to see more and more real world use cases kind of being built out. I think the IP that organizations hold is also deeply important, profound. And you're seeing a rush now of different organizations, whether it be luxury brands or, sports franchises, thinking very deeply about their IP and kind of what potential it might hold. I think one of my sort of favorite minting models around this is that 200 square miles of the Earth's GDP creates roughly $85 trillion of GDP. Well, the metaverse has infinite number of square miles. And so, the opportunities that NFTs provide is almost limitless. And so I think that, it's again, to Taylor's point when he started this webinar, it's almost impossible to predict the future. But I think that, we're very much starting to see kind of that the possibilities of what it might look like kind of unfold in front of our very eyes. And I think that's insanely exciting.
Amazing. Love the upward angle at the end. Thank you everyone for joining us for this webinar, Institutional NFT Strategy, presented by BitGo and MetaMask Institutional. I've been your host, Taylor Engstrom, joined by my colleague, Johan Bornman, and my good friend, Nuri Chang. Would both of you want to close on any sort of specific leave at home point, or we can close from there?
Nothing from my side. Thank you all for joining, and thank you to Nuri, and thanks, Taylor.
Likewise. Thank you, everybody.
Thank you, everyone, for joining us. We will be following up via email. You can also follow Johan Bornemann and Nuri Chang on Twitter. I posted in the chat. Thanks again for all your great questions. And thanks to the hundreds of people who signed up for this and all those who joined us today. Have a great Thursday. Talk to you later.
Thank you.